Hello and welcome to Big Deal. Today we have with us on the show CDPQ, the Emerging Markets Global Head of CDPQ. Anita George joins us straight from Gurgaon studio. Anita, so good to have you on CNBC-TV18. Let me first ask you, $4 billion or so of investments that are deployed in India over the last 2.5 years. At the moment, what are you looking at? More investments?
Yes, definitely. India is one of 5 priority countries that CDPQ focuses on, and we are very keen to find the right partners. As a long-term investor, that's what we look for, and then invest multiple rounds with them, grow their business alongside as a partner.
Right. Your latest investment, and you said that to find the right investee company and also partner, and then do multiple rounds. And you have demonstrated that in Edelweiss Group as well, because you came in the ARC in 2016, and now you have invested in the NBFC as well. Recently, $250 million. Can you tell us the rationale behind investments in NBFC at a precarious time like this?
Yes, Nisha, it is a tumultuous time in the market. It has been for NBFC, but this is precisely CDPQ's belief that as a long-term partner with Edelweiss, as you rightly pointed out, we work with them on the stressed asset side through the ARC. And now we are investing alongside them to create a credit platform. And we feel that now is when Edelweiss really has opportunities to grow and to grow this business over the long term. CDPQ, as a good partner, will stand by them.
So, Anita, you were talking about your Edelweiss investment. I wanted to understand, why would you go ahead with the NBFC space right now, while a lot of investors still feel that more pain is left in the NBFC space?
Yes. Thank you, Nisha, for that question. The NBFC space has been undergoing turmoil, and you're right that they will probably see some more second-round impacts of what has happened in the market. Our approach as a long-term investor in the market and as a partner to Edelweiss is really to look at this more from a long-term point of view. And we see a lot of merit and scope for growth. India's financial sector is still has a long runway, in my view, and that's what we are betting on, along with our partner Edelweiss, to build a business that will really grow and last.
So, Anita, help me understand that since the entire NBFC space is seeing crisis situation, the stock levels are really below their fair valuation also in a lot of cases, would you look at more such opportunities in other companies?
So our approach is really to work with partners. So if we do find the right partners who are really in the game for the long term, we could. But we also, as I mentioned earlier, have an approach of investing multiple rounds with the partners that we've selected. And we have 4 partners in the financial sector, Kotak Bank, HDFC Limited, Piramal, as well as Edelweiss. So our approach would be to work more with these, as well as look at new partners if we find the right ones.
All right. And what do you have to say about the ARC experience with Edelweiss? How do you assess that investment at this point?
So the ARC experience for us has actually been a very good one. And we came into the sector when the IBC code was just being approved. So there was still a lot to be seen in the market. But I think our experience has been very good because Edelweiss has deep expertise and knowledge in this market, and they have an excellent team. And that's what we betted on, and that's what is paying off. And I think there will be a lot more opportunities as the IBC gets more sort of established in the way it's implemented.
But if I look at your portfolio, whole of last year, you have done more of equity transactions like buying out stake in Kotak Mahindra Bank or HDFC Limited rather than going ahead with pure play private equity investment like you did in TVS Logistics. Why so?
Yes, so we as CDPQ, we have 5 asset classes. We have infrastructure, real estate, private equity, listed equities, as well as fixed income. And we work across all these asset classes in India. And again, we really look for finding long-term partners, and they fit into any of these, or rather the investments we make alongside these partners fit into these different asset classes. And that's the approach we've taken. You're very right to note that our first few investments were in the private equity space, and we've done repeat investments with those partners. Then we've moved on to more listed equities. We've also made investments in both infrastructure and real estate. And very soon you will see also some investments in the fixed income space.
What are the kind of fixed income investment spaces that you're looking at?
So we already have investments in government securities. We look at both quasi-government investments in the fixed income space, as well as corporate and corporate debt and structured finance type debt instruments. And we are looking actually across the board.
Right. So structured debt, mezzanine debt, also linked to the equity upside kind of returns, has been something which a lot of private equity players have started doing in India because of the debt-laden nature of a lot of big conglomerates. Is that something that we can expect from CDPQ, and which are the sectors that you could really focus on, or what type of assets?
So yes, that is something that we are studying at the moment. We don't have a sort of firm idea of what we would like to do. But as I mentioned, typically even in these spaces, we try and find the right partners who we can work with, who know the market, who know the borrowers. And then actually we will decide where we want to play across the spectrum of fixed income, ranging all the way from sovereign to, as you rightly pointed out, the opportunities in the mezzanine linked to equity return type structured instruments.
Right. So out of the $5.6 billion of commitment to India, is the fixed income amount also coming out from there, or are you still looking at pure play equity in that kitty and would have more disbursements coming in from your global fund for this new structure?
That's right. So the 5.6 billion is already committed, and it is other than the government securities which I mentioned, we haven't yet done fixed income investments. So whatever we do in fixed income will be over and above the 5.6 billion.
So any ballpark figure of how much would you be looking at committing going forward with this new asset class emerging for CDPQ in India?
So we typically, again, as a long-term investor, we don't have targets. My only target is to find the right partners and to invest in good investments for the long term.
Anita, you have a few investments in power sector as well, like Azure Power as well as CLP. So how are you seeing the traditional, the conventional thermal power space, and are you more keen on the renewable sector?
So we as CDPQ, we have made a commitment in 2017 to mitigating climate change, and we actually have targets for that, and our targets are to reduce the emission from our portfolio by 25% by 2025, and to increase the green investments that we make by 50% by 2020. So given that kind of real commitment, we are focusing on renewable energy, energy efficiency in a big way. And our recent investment in CLP as well as in Azure is an indication that we will be focusing on renewable energy. The power sector in India is something that we have studied at length and worked in for quite some time. So we know the risks and the challenges of the sector. But I think, again, what goes without saying is the huge demand, and yet there is much to be done. Also, India has large targets yet to be achieved on the renewable energy side, both solar, wind, as well as hopefully distributed generation as well. We also look at transmission and distribution through our investment in CLP, and that's again an area that we're very interested in supporting.
Right. So more investments in power, and especially renewable energy you're looking at, because there are many companies which were looking at equity fundraising, and given the market condition and also the overall valuation dynamics around renewable energy, they're not getting any good valuations from equity fundraising. So is that also a space that you could explore now?
Yes, it could be.
And what are your plans for TVS Logistics? It's one of the first few investments you made when you came to India. And now, do you think that it's mature for an exit? And how are you looking at an exit? Or what is your long-term plan for this particular company?
So we are long-term investors, and we are not looking for an exit anytime soon per se. But the company is doing very well. It's an end-to-end supply chain company, and I think it's really a fantastic example of an Indian multinational that is also focused globally, providing end-to-end supply chain solutions to their customers. They also have a big focus on Asia, which I think is a very exciting and growing area. One of the lesser known things about TVS is that they have really reinvented themselves in terms of technology. They have one of the best technology backbones in terms of being able to serve their customers with solutions that are real-time, online, traceable, and these are things that they've managed to do in the last 4 to 5 years through their strategy of acquisitions, and they've been able to take those capabilities that they've acquired and apply them across the supply chain, across different geographies, and that's something very exciting. TVS is looking at, in the coming years, probably a listing, which would be very exciting for one of India's largest logistics companies. And the GST obviously has also contributed to their ability to do what they were always thinking of as their competitive advantage of being able to provide end-to-end solutions across the globe. And GST in India has really furthered that strategy. Our intentions with TVS is really to stay long-term and to see how, as this business builds, we can help and invest with TVS further.
Okay, so you're looking for more investments in TVS Logistics?
Over the next several years, yes.
Okay, and you are looking at some part of probably returns and exit at the time of IPO, whenever that happens.
It could be, but it's TVS also has other private equity investors, so I think this would be more relevant for them. For us, our approach is much more long-term, but yes, we could consider also at some point in time.
So, Anita, you have stated it clearly and established this point that you look at partners and then go for long-term investments. Also, pension funds are known for their annuity kind of returns, and they're more comfortable with those kind of investments as well. Now, telecom tower space has emerged to be one of those best-suited assets for this kind of an investment. You have in the past looked at some of the assets as well in telecom tower space. How are you positioned right now? Are you still spending some time in that sector, because there are some opportunities available still?
Yes, the tower space again comes under our infrastructure asset class, and is something that we've looked at and continue to look at. And I think this is a space that, under the right terms and conditions, we would be interested in investing.
So, in infrastructure then, Anita, how do you view that? I know some of the assets were on sale and CDPQ was spending time there. There is Sadbhav also, which had some of the projects on sale. So how are you looking at infrastructure, and would you be spending a lot of time there?
Yes, infrastructure is a very important asset class for us, and India definitely needs infrastructure investments. We will be very careful and selective in terms of, again, partnership and the quality of the assets that we would be willing to invest in. And I think most important in all of these is really having the right team.
Right.
So that's something else also that we are focusing on. And the road sector, airports, all of these hardcore infrastructure sectors are of interest to us. We have, I would say, deep global experience in some of these sectors, and so we would be very interested in partnering with the right partner and building infrastructure assets in India.
So which is your sector which is on top of your mind, Anita, for next investment?
Well, you know, we are sort of educating ourselves and extremely interested in the IT-enabled space. And that's something that we haven't done much of, but I'm hopeful that over the next year and a half, we should also start investing. We are very fortunate to have a partnership with Fundamentum, which is sponsored by Nandan Nilekani and Sanjeev Agarwal. And it's been a great experience to work with these partners who know the technology sector so well, and we are learning a lot, and our hope is that going forward we can actually deploy some capital towards that sector.
All right, so that's an exciting space, and it's developing very fast as well, though there are 2 live transactions going on right now in IT services, mid-cap companies as well. Apart from that, would you also be backing some of the strategics? You're already in the ARC space, in the stressed asset space, with Edelweiss as your partner. Apart from that, there is a lot of requirement of cash by the strategics in India who do not have the bandwidth to go through with a transaction on their own. So TPG had backed UPL. There are many other like Aon backing JSW and Monet Espa. So are you looking at something like this also going forward in stressed, or else in big acquisitions for the strategics?
I would say that it would have to be, one of our challenges, since we have 310 billion assets under management, we need to find investments of a certain critical size. And that being the case, Our preference is to work through our partners, because that way we can reach across to several mid-cap companies who on our own would be too small for us to manage. So I would say our strategy would remain mainly working through existing partners, and we have several in the financial services sector as well. But if we come across the right potential partner which on a standalone basis has the ability to invest and deploy capital, then that is something that we could consider as well.
Anita, you spoke many times about the eligible partner. What are the eligibility criteria, the top 3 attributes that you find in a partner to bet your money?
I think the topmost would be integrity, reputation, and corporate governance. The second would be deep domain knowledge and a track record in the field that they are in. And the third, I would say, is the team. Because in a lot of the investments that we make, it's the people who make the difference.
All right, I'm sure many of the aspirants of your funds would be hearing this. But last question to you, Anita. You are heading the global emerging markets for CDPQ.
Yes.
How is India positioned compared to the other emerging markets? What differentiates India? And when you look at the overall basket, how do you put India in the pecking order?
So as I mentioned at the start, India is one of our 5 priority countries. We have China, Brazil, Mexico, Colombia, and India. We also make investments in other countries, but typically with a long-term partner who we already know very well and who has deep experience in those other countries. But in terms of proactive and direct investments, it's in these 5 countries. And I would say India fares very well. In a partnership approach, India offers us several very good partners who meet the criteria that I spoke about. And so I would say that is one critical aspect. The second is really the fundamentals of the economy. And that, again, in India really appeals to us in terms of democracy, demographics, the digitization that's happening, the entrepreneurial drive that exists in India, the ability to take advantage of the growth that the Indian economy is poised to further growth, and having a long growth runway. That's also very important, because as a long-term investor, you really want to see that long-term potential and opportunity. We also are very positive as we have invested quite a bit in these other markets that I mentioned as well. Yes. But definitely India stands out.
All right. Thanks so much, Anita, for talking to us about your strategy and the way forward for CDPQ in India. Thanks so much for joining us. So that was after the investment of about $250 million that they have committed for Edelweiss Financial Services. A few important takeaways coming out of the conversation with CDPQ is that in the areas which are new, they would be looking at IT-enabled services. They are studying that sector for investments in future. Renewables and financial services are 2 important areas they are looking at more investments in. And another new asset class that CDPQ could bring into India could be in the fixed income side. With that, it's a wrap on Big Deal. Thanks so much for joining us.